I looked up some IPOs in the past, and ones that came out maybe not at the best time in the market and had to reset or just spent some time. And if you could go to Microsoft in October of 1986. So let's go back and let's study some of the stocks.
There we go.
Yeah,
Mr. Softy.
Let me get my charts set so I can. Yeah. Okay. So Microsoft came out and it had a decent move on its, in those first few months of trading. But then we got into a very choppy market, and it came down a number of times. And this is what you really kind of want to be looking for and waiting for a stock to be breaking a downtrend, to have spent some time hitting the bottom 2, 3. I mean, this is actually 4 times. And then on that last move down in September of 1986, the volume on that decline was absolutely nothing. I mean, look, it didn't trade average daily volume for, it looks like, 2 weeks or so. I mean, it wasn't even close. Yeah. If you could highlight,
right here. Yes.
Well, there, but then also go to the next
over
spot.
Here.
Yes, right
there. Okay.
Complete on that move down, there was absolutely no volume, and then the stock exploded, and it broke the downtrend, and then came up to 35, pulled back for a few days, and then it was still straight off to the races. But that's the type of buying you want to see when a stock lifts off a bottom and has put in. I mean, that's only about 4 or 5 months of action on the downside, but it gives you an idea of what to look for in something that is a newer issue that comes out maybe late in a bull market. And there's a few of them that we have. But now let's go to Apple. And Apple, we actually have to go back a little bit farther. Go to February of 1983.
February 1983, sure. Is it daily okay, David, or go to a weekly?
Yeah. Well, let's say you go to the weekly first, and you can see that that Apple came out also. Let's see, 1981. This was, we were still in a bear market, and a market that had been going sideways since like 1966, if you can believe that. We hit 1,000 on the Dow, I think, in 1966 or maybe even 1962, and it was just sideways and chopped for the longest time. So Apple comes out, and it immediately starts going down. But then it breaks that downtrend. Again, it's similar action to what Microsoft was doing in 86, but breaks that downtrend. And then really highlight that volume down at the bottom. Since from the break of that downtrend, yes, right there, look how the volume characteristics completely change. You get the biggest volume that ever traded on the upside, and that's a real good sign right there. That's a huge amount of institutions and individuals, I guess, buying that stock on that turn. And then it doesn't let up. It goes up fast. It consolidates for a few days. It breaks out and it goes again, and it's straight up. And so if you didn't buy it off that downtrend, then you wait. It gets up to 34, and then it puts in not a whole lot of time. It puts in just a couple of weeks. But then on that breakout of the new high, look at the volume again. I mean, that's what you want to see. You want to see huge volume spikes, and you want to see them consistently. You want to see as many days in a row to the upside. You want to see volume when the red volume comes in, when the down days come in. You want lighter volume. And That's what happens when a stock starts turning. The characteristics of how it acts completely changes. And see, so it built a great base. That's, you can almost call that a cup and handle at 34 and breaks out, and there's your buy point. And that's what I think a number of the IPOs, especially the ones that came out late last year, might set up to. I've always said that the best IPOs come out in a horrible market. They're usually priced a lot lower than when you're in a super hot market and money's sloshing all over the place, and they give these super high valuations. But some of them, the better ones, are usually late in the game or while you're going through going through a bear market. The other reasoning too is that when investment bankers, their job is to bring companies public, and they get huge fees off that. And when the market has been going along for a long period of time, they're just searching, and probably the best companies have already come out early in the bull market. As you get later and later in a bull market, they're running out of inventory, and they're scrambling to get almost anything they can to market. So you just got to be careful in IPOs that come out late. Usually, if they're good companies, they usually have to go through a lot of time and set up before they start turning. So then let's look
David,
at what, yes.
Yeah, I just want to ask you, and maybe some people in our audience have been very astute about that 6-month line or the 18-month line. 18-month line. So it's interesting here that we peaked in Apple right after the IPO in January of 1981, and then so if we go 18 months, then basically June, July of 82 is when pretty much we've had this really long slog down, and then now it starts to turn.
Yeah. I don't know if if that works as well on the upside, on the downside as
on the downside,
upside.
Yeah, maybe
but,
not. But
because moves usually last a year and a half, but down moves in bear markets usually last 9 months to a year. Mm-hmm. They usually don't go on, much longer than that, unless the economic conditions are that bad. Mm. So maybe we have to put in another line for bear markets.
Maybe. Well, if we go from here, then that was pretty. Let's see, from July, and then that's 5 months. 6 months, and then let's see. Yeah, that's still not 9 to 12 months, but almost a year from the start of the real decline after it failed to finish that cup handle. There's also too, I adjusted the price and volume, the settings here, David, and you can see just like what you mentioned on that break of the 40-week line, the volume was 800,000 shares more than the initial IPO week. So hopefully people can see that a lot better now with the adjusted. Okay, so next stock.
Next stock, let's go to Shopify. This is more of an earlier 2016. Let's see. Go to May of 2016. Let me see if that works. Let's see.
We have the weekly chart through May 27th, 2016 right now.
Let's see. I wrote down. I'm sorry. Go farther. Go to July. Go August of 16.
Okay, not a problem.
Yeah, and okay, so, and then if you go, it might be better if you go to go to the daily chart, so you can see the. Okay, so good, you got the whole picture. So here's another one that came out. That came out, I guess, late. The market. Let's see. Yeah, the market went through a couple of corrections right after it came out, and then made some lows, I guess, in February of 2016. But here, new issue. Okay, then had this long decline, And you can also, again, you can draw a downtrend line from that looks like 39 area all the way down to you know, to where it down into the low to like 23 area. So there's the downtrend, breaks the downtrend, and then you can also see and at the end of February, you got a really nice rally that went from 20 to, I mean, I guess it went all the way to 32, but the beginning of that rally, you had 1, 2, 3, 4, 5, 6 days in a row of some huge volume, some big volume, volume above average daily volume. You also got a 3.5 million share day to the upside on it looks like a gap up. Maybe they announced earnings, came back down, and then started rallying again. And but the real buy point here is yes, you could have bought early, that would have been great, but the stock rallied all the way up to 32, and really your buy point is when it goes through that 31, 32 area in June of 2016. And see, this is what you're probably going to have to do, and probably it's going to happen a lot, is you're not going to get the bottom, and trying to buy, and even buying these, you know, these downtrends after they've undercut their previous lows and such, is probably a very, very early start. But your lowest risk areas after the stock has shown itself to you, has shown you some power, has shown some institutional buying, has made a move from 20 to 32, builds a really nice base, and then starts breaking out and going. That's where you really want to get your names. And so, two points I really want to make is really wait for those bases to form. And we're very, very early, because I don't see any Shopify's. Well, maybe we'll look at a few stocks, but I don't really see a whole lot of Shopify's out there that are setting up like this. So wait for bases to form. You have to be patient. You have to sit back and wait for the market. Let the market show you what you want to see. And the second point is give up the first move. If you're buying anything that's coming off a low, don't try to buy the low. I never try to buy a stock that's in a downtrend making new lows. I wait, I give up that first move. And that first move, look, that first move is 50% off the low, but that's fine, because if this is really going to be a great company, it's really going to make an 18-month move, and it's got all the characteristics. If you get that move coming out of 30, well, you could see what happened with Shopify if you move forward. But it had a tremendous move. So give up the first move. Don't have to get into there early. Let the market, let the stock prove that it's strong, and it's got institutional buying in it.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.